Welcome to Idea to Investment, the podcast where we dig into the exciting world of entrepreneurship and investment. We tell the stories of the tech creators doing innovative work and the investors who back them up. Along the way, unveiling the fascinating journey from the birth of an idea to scoring crucial investment. We highlight the voices of entrepreneurs, showcasing their grit and creativity, all while gaining insights from the investors who believed in those dreams. Get ready to be inspired, stay informed, and stay tuned as we explore the awesome collision of ideas and investments. Idea to Investment is a production of Tech Alliance of Southwestern Ontario.
My name is Janet Bannister. I am the founder and managing partner of Staircase Ventures.
And Janet, I thank you so much for joining us on the podcast. Anybody who knows you, anybody who knows your name, knows that you've got a pretty incredible history within the tech world, in the investing world. And usually we start the podcast off with a pitch. So I thought this might be a great resource for founders. Because you've seen so many pitches, what do you think makes a great pitch versus a not so great pitch?
First of all, Ken, I would just say it's awesome to be here today. So I've been so looking forward to our conversation. So it's great to be here. So in terms of just for some perspective, in terms of what I do is as I said, I run a venture capital firm. We invest in seed stage businesses. So early stage companies, mostly in Canada, tech companies. And so typically when we are looking at a company, they've probably got a bit of revenue, maybe $100,000, $200,000 of revenue a year, maybe up to $1 million of revenue. Some have no revenue. And so that's sort of the lens through which I will be talking about. For some perspective, we see about 1,200 to 1,500 pitches a year, and we'll invest in 4 of them. So we see a lot of pitches. And then obviously the obvious question is, what do you look for? So I'll say a couple of things in general at a high level, and then specifically get into the pitch deck. At a high level, when we are making an investment decision, there's 2 key questions we're asking ourselves. Number 1, do we think this could be a massively successful business? So that's all about, what is the business? What's their long-term competitive advantage? How are they going to go to market? What's happening with the dynamics, etc. And then the other thing is, what about the team? And is this a team that we think can execute on that vision? Can they realize the vision? And so those are, as I said, the 2 high-level things. So then in terms of the pitch, I think most pitches that we see are fairly standard in that they sort of say, hey, here's the problem, here's what we're solving, here's the problem that we're solving, here's why we can solve it, and here's a little bit about the team, and here's our projected financials. The thing that I find most pitches miss is really a perspective on how is the market changing over the next 3 to 5 years? How are you well positioned? Why is now the right time? And how will the competitive dynamics change over that time period that sets you up to win? So for instance, a lot of decks don't even have anything about the competition. Those that do have things about the competition, the typical slide is, it lists here's all the different criteria, right? Like, it does X, it does Y, it does Z, right? You can sort of visualize it. They're going down here and it's like name of your company, check, check box, right? And then it's got 3 or 4 other competitors and like they've got some checks, but not too many checks, right? To me, that slide, it's sort of interesting. But I'm like, okay, that doesn't tell me how you're going to win the market in the next 3 to 5 years. That just tells me what features your product has today relative to the competition. And I don't know whether they're going to launch tomorrow these specific features that you're showing that they don't have. So tell me, as I said, how is the market evolving? What is your long-term competitive advantage? How will you stay ahead of competitors who are much better funded than you?
As I alluded to off the top, you have built and scaled and invested in some pretty recognizable companies. Kijiji probably at the top of that list. But there's also, leading to things like Real Ventures and now Mosaic. So is there a common thread among those other than you?
Oh, yeah. There's lots of things. I think I would say first of all, the most common thread amongst all successes, and I would say this is, I don't care if you're talking about business or if you're talking about athletic successes or any successes, is that it's not a straight line. And it's a lot harder on the inside than it looks on the outside. And I think that, if I think about all the successes that I've been part of or that I've witnessed, there's always it's a series of 2 steps forward, 1 step backwards. Try this. Okay, this didn't work. Okay, we've got to course correct this. And I think it's really important that everybody understands that, because you will hit those roadblocks. It will be challenging. You will hit what could be perceived as dead ends, and I think everybody needs to understand, hey, it's just part of the journey. And it's part of the journey that I'm going to learn how to overcome this challenge or get around this obstacle, and I'm going to be better as a result.
So put that into a real world perspective for us, and maybe take us back to that founding of Kijiji, and what were some of those, let's call them non-linear directions that you had to kind of maneuver when you were in the founding stages of Kijiji.
So, I mean, I think for one thing, when we launched Kijiji, of course, we had to figure out how to get traffic to the website, which was which was tough, because we launched, it was free local classifieds. We had to get traffic. You have to get enough traffic, buyers and sellers, in order to create liquidity on the platform in order for it to be valuable. And yet we weren't making much money on the site, so we didn't have a whole big marketing budget. So I think what we did was we just experimented with a whole bunch of things, and we didn't get too discouraged when something didn't work. So, for instance, I can think of a couple of things. I had this idea that I thought, because Craigslist existed in the market, and I thought, okay, Craigslist exists. With online classifieds, its first mover has a huge advantage. So I said, we will not be able to compete against Craigslist. So what we need to do is go after people who aren't using Craigslist, because Craigslist did have a pretty big presence, but most of their customers were young single men. And so I looked at a whole bunch of different, thought through a bunch of different ways that we could go with Kijiji. And I said, let's go after families, young families, because they are buying and selling a whole bunch of different things, everything from bikes and skis and strollers and the whole bit. They're selling these things, and they don't know that Craigslist exists, so we don't need to worry about them as a competitor. And so we did some things that really didn't work out too well. So for instance, I remember going to a parenting trade show. We set up a booth. We had like this popcorn maker there. We had bags with Kijiji on it, so that people would come by. We'd give them popcorn that they would carry around the trade show with this Kijiji label on. Anyways, we thought it was a good idea. Didn't do anything to traffic. We spent a whole weekend there. Giving out, smelling like popcorn, and the traffic did not budge. But that was okay, right? It was so, I mean, again, that's a little minor thing. I remember another thing that I really wanted to try to get some PR. I thought that it would be great to get some press, because again, we're trying to do things without any budget. So I was always calling up like newspapers and TV stations and radio stations and saying, hey, we've got this new site. I think it would be really interesting for you to write about it. And I remember once I finally got through to a reporter at the National Post. And he was like, sure, I'll talk to you. So I was like, great. So I drove over there, and the office was at Don Mills and York Mills, for anybody who knows in Toronto. Like, I can picture to this day. I went in there. I was energized. Okay, here are my talking points. This is awesome. This is great. And I sat down with this journalist, and he proceeded to berate me for half an hour about, Janet, this is a stupid idea. Don't you know this will never work? Da 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 da. Don't you know that Craigslist exists?
Wow.
Anyways, and I remember, by the way, driving home and being like, I can't believe this, you're going from this high thing. This is going to be my breakthrough moment. And, but then I remember I said to myself, Janet, you have a choice of how you're going to react, and get discouraged. Get determined, not discouraged. And I was like, I'm going to show that guy. I'm going to show him that we're going to build a big business. But anyways, those are just 2 examples of things that we tried, and we thought they would work, and they didn't work, right? Again, they weren't the death of the business, but they're just little examples of how you got to try these things. You got to experiment, and not everything's going to work out, right? And spend, I don't know, 2 weeks or a day calling on a whole bunch of different customers, and everybody will say no. But that's okay. You learn, right? And so
Mhm.
I just think that that mentality of, and I think it's almost two things we're talking about. One is always experimenting and learning. And then the other thing is keeping going and persisting, even when, things don't work out.
Little did that journalist know that he lit a fire under Janet Bannister and probably made Kijiji even more successful despite his
Exactly.
criticism. Janet, you have spent a lot of time in both Canada and the U.S. In the tech industry. Um, Maybe talk about what drew you to the U.S. initially and what drew you back to Canada.
Yes, absolutely. So the story with me going to the US, it's sort of an interesting story. So in 1999, I was actually working at McKinsey, and I started to realize based upon our work that like this internet thing was coming on strong. And I thought to myself, geez, like technology is going to transform every single industry and every single functional area. And I said to myself, Janet, if you want to be successful in business long term, you've got to get onto you need to learn more about technology. So I had gone to Western, did a business degree, I worked at Procter and Gamble and McKinsey. So like, and I just love business. I love the business world. I still do. And so I thought, if you don't learn about technology, you're going to become irrelevant. So I started thinking about that, and I also had run my own businesses all through high school and university. And I thought what I should do is I thought I should move to Silicon Valley and join a startup. I joined a tech startup. I was like, interesting. So what drew me was a fascinating life experience. I thought I'm going to learn a ton. I'm going to meet new people. I will expand my horizons. I'm going to learn about technology. I'm going to do startups, which is what I love to do and what I want to get into. And so it all seemed to, so that's what sort of drew me. Now, there's sort of a funny story in terms of how I got there. Basically, long story short, I just cold called my way into different VCs until I finally persuaded somebody to give me a meeting when I was in town. And so I flew down the next week to San Francisco for a 30-minute meeting, and met somebody who then introduced me to Meg Whitman, and I joined eBay at a phenomenal time. It was just an incredible experience. And so I am so grateful that I had that experience. But what was interesting to ask you to answer the second state question is why did you come back to Canada? And after spending 4 years in Silicon Valley, as I said, it was amazing in many ways. I learned a ton, terrific people, great friends that are still very close to me. But I really decided, like my husband is Canadian, and we wanted to live in Canada. I became a much more loyal Canadian, actually more or patriotic Canadian, living in the Valley, living in the States. I think you just sometimes you don't realize how special something is until you leave. And I wanted my family is here. A lot of our friends are here. We wanted to raise our family in Canada and just love Canada as a country. And so I decided that, long term, this is where we want to live.
You had to go to the US to appreciate Canada. That's beautiful.
Exactly, exactly.
So let's talk about you as an investor. What is your investment philosophy? And maybe talk about how investment philosophies overall are shifting, particularly in Canada in the tech industry.
Interesting. So I guess my philosophy, I mean, as I mentioned earlier, we lead seed stage rounds in Canadian-based businesses. We look for great founders. What I have learned is it's not the number of years of experience that predict whether a founder is going to be successful or not. It's much more about their character, their vision, their ability to hustle and get things done, to attract people, like outstanding people to their company. So I would say, as I said, so, and we also, I think, we lead seed stage rounds. So I think that's sort of interesting. And what I mean by that is some investors, particularly angel investors, will write relatively small checks versus we like to lead. So write a larger check and get 10 to 15% ownership in the company and really play a meaningful role working alongside the founder as that founder grows and develops. So I guess I think the other very unique thing about Staircase Ventures is we have what we call a founder growth platform. And so, I talk about the importance of founders. And what we said when we launched Staircase Ventures is that while most venture investors or other type of investors in early stage companies will say, oh yeah, the founders are the most important thing. If you ask them how they add value post investment, they will typically talk about things like adding strategic value, maybe introducing the company to customers or things like that. And I said, hey, we're going to do all of those things, but we also want to focus on the founder growth since that's the most important thing.
Mhm.
And so we do things that I have learned can make a real difference based upon my 11 years as an early stage investor. And so specifically what we do is we provide executive coaching for the CEOs, so like through third party. We also have peer support groups, so the founders can be part of a different peer group so that they can talk in a confidential way to others who are going through a similar thing that they're going through, similar early stage founders. And then we also do things to help them show up their best every day. And so specifically, we have a partnership with Cleveland Clinic Canada. So all of our founders have access to confidential, complimentary health and wellness coaching. We have a personal financial advisor, and we give parenting support, both in a cash stipend as well as parenting resources.
So, Janet, over the course of your career and your life, I'm sure you have seen different cycles of hype. There was fintech, clean tech, now it's AI. When it comes to that kind of hype, what do you see as an area that's being overhyped right now? Or maybe also, in addition to that, what's one that is kind of underhyped right now?
So I mean, I think maybe it's going to be obvious, but I do think that AI is overhyped. I think that AI, it's been said before, but I'll say it again, that a lot of times when new technologies come out, that their potential is overestimated in the short term and underestimated in the long term. And we're already seeing data that these AI, that basically corporations are not adopting AI as quickly as some companies may have thought that they would do. And they're not always getting the results from AI that they expected to do. So I think definitely, like, I do think that AI is going to dramatically change our world, change our business world, change everything. But the question is, how long will it take? And are some of the startup companies overvalued because they are based on very aggressive assumptions in terms of the pace of which AI is going to be adopted? And I think the answer to that is yes. So I think there is some overhype in AI. And but as I said, I do think that longer term it'll be very compelling. I think in terms of areas that are not overhyped, like, I actually really like to do things that are not overhyped. I mean, I like to say, I like to zig when others are zagging. I mean, online classifieds, I happen to love that business. It's not an overly fancy business, but it's like really good. So, I mean, I am interested in some companies, for instance, we have a software company in the oil and gas industry, helping them better deal in a more environmentally and responsible way and cost effectively with their waste products. So again, like, as somebody who's based in central Canada, I didn't know a whole lot about the oil and gas industry, but I learned a lot about it and about the regulations and about some of the challenges, and we invested in that business. We have another business that is software for the global textile industry, which is doing some very unique things in an industry that, again, I didn't know a whole lot about. Not last week, but the week before, I was in Brazil, meeting a whole bunch of textile companies, learning about their industry. So I do like to invest in areas that not everybody knows about, like, and not everybody necessarily thinks about. But if you get in there and start to dig and learn the industry and spend time with the customers, then you say, oh yeah, I see this. Like, this could be a massive opportunity here.
Yeah, I think that's sometimes where some of the biggest successes come from those things that you find that are underhyped, but are usually underrepresented as well. So,
Exactly.
Janet, you mentioned all of the pitches. You say hundreds of pitches. You may select less than a dozen for investment. So, how then do you think, can a founder best position themselves for capital, and not just through the pitch. I mean, like through their strategy, through their relationship. How what can they you think most founders can do differently in that respect?
So I think the first thing is picking a business that is unique, right? And we go back and talk about AI, right? And I just talked about like I am looking for a company that's that's different, right? And so specifically, we see a lot of, as an example, AI companies in legal tech, AI for accounting software. Now, there may be some new businesses and some very unique concepts in there, but just really but I guess the thing, the key thing is to differentiate your business. Like, tell me why this business is very different from everything else that you've seen. And also tell me why it's going to be a massively successful business, right? And recognize, I think when you're pitching the other thing I will say is when you're pitching an investor, it's very different than pitching a customer. Sometimes I see companies that almost pitch a business as though they're pitching the customer. So for instance, I mean, this is maybe an extreme example, but I remember getting pitched. Now, we don't invest in consumer packaged goods, but I was judging as a case competition. And there was this company that was pitching this new type of tea. And at the end of it, I said, you know, I really want to buy your tea because I think it sounds great and it's super healthy, but I don't know why I should invest in your business. Right. And so just make sure that you're talking about why is this an attractive business? Why is this going to be massively successful? And tell me why you are the right people to make this business incredibly successful.
Janet, you have been a champion for women in tech and in VC because you have been a woman in tech and VC for a long time. Talk about how has the industry changed in regards to gender equity in the time that you started up until now, or has it really?
So I think it has changed. Um, I would say it probably has changed a bit, but not changed enough. You know, the stats, I was looking at some stats this weekend. There's still less than 5% of VC-backed companies have a female CEO. Like, you think about that. And what's interesting is in our portfolio, that number is 25%. So we don't invest just in female teams. We invest in all types of businesses. But 25% of our founders are female. And I think that's an interesting stat. And it sort of says, well, why? Why does it index 5 times as high? And I do think that a lot of times women are underestimated. Not all the times, but sometimes by men, right? And it can just be more challenging. That being said, I'm a positive person, and I do think that anybody can be successful, and that on the flip side, I think that there are certain advantages to being a woman, and in terms of some different sets of perspectives and things like that.
So then going forward, what do you think is going to turn that tide? What's going to be the shift going forward that will see that number go at least above 5%?
Well, I think for one thing, we need to have more success stories with women leading the charge. And so, or I should say, we need to profile more women. It's not about having the women, it's about profiling them. And I think, you know, sometimes, you know, I think that the more that the news media can make sure that they are balanced in terms of their news and highlighting amazing women tech founders, or founders are successful in anything. But I think that when our news media focuses on male founders, or if we open up an article and it's an article and there's a bunch of founders profiled and 7 of the 8 are men, I don't think that's really necessarily helpful for women who are aspiring to be the next tech executives, or for even investors of any type to sort of subconsciously think, oh, I see, this is what tech leaders look like.
What part do you think female representation plays in the VC world? I mean, when someone like yourself is approached by a female founder, it's probably a very different interaction than when that same founder is faced by, a room full of just men?
Yeah, I think it depends. Like I will say, so for one thing, yes, the data indicates that, like for instance, if a venture capital firm has females as partners, they are more likely to invest in female founders. Like that's the stats. At the same time, I would say I have had some incredible role models and mentors along in my career who have been men who have been very supportive of me. And I also think, so I guess yeah, so I don't like, so I don't want to paint, certainly, it's like there's some amazing males or men in the ecosystem who are working hard to change the game for women. And so that's great. And I just hope we continue to see more and more women continuing to start businesses and build businesses.
Let's talk a little bit about risk. When it comes for you, your personal approach, what does de-risking look like for you when it comes to your overall portfolio?
Well, so our portfolio, we invest in a bunch of in very different companies. So, it's funny. Some people are like, "Oh, early stage investing, Janet, that's so risky."
Hmm.
And I sort of think, "Oh, I don't know. I don't consider it too risky." And so then they're like, "Why?" And I guess first of all, I always say that if you want to bet on if you want to de-risk, bet on yourself. My father was a career salesperson. He was a salesperson at IBM. And I remember him saying, people sometimes think that being a salesperson on commission is very risky. But he said, my perspective is it's actually not very risky because you are in control of how much money you make. And he said, when times go bad, company's going to lay off maybe the marketing people and maybe the HR people and maybe the finance people, but they're not going to lay off the people who bring in the most sales. So anyways, that was my fault. Maybe that sort of influenced me as in terms of, so I sort of think, yeah, I guess technically maybe it's risky, but the flip side is I get to work with these founders. I'm talking to them every week. I get to help them and support them and help them make key decisions. I would say though, what we do is we do think about from a portfolio standpoint, diversifying across different industries and different types of companies. So for instance, we have invested in, fintech, property tech, I mentioned supply chain tech, regulatory tech, oil and gas tech, like a really wide range. We've also invested across different types of technology. Some of our companies are AI first, some are not AI first. And so I think that diversity is very helpful because often in the VC business, funding it's a very cyclical, and sometimes it will dry up for certain types of companies and then be very robust for other certain types of companies. And different industries or different types of companies will fall in and out of favor, such as e-commerce has gone in. Sometimes the markets think e-commerce businesses are great, and then no, they're not good. Nobody wants to invest, and then oh yeah, they're great, right? And so it's same with all different types of businesses. Marketing tech, same thing, went through different waves. And so I think by having a diverse portfolio, it helps to balance that risk.
So let's get philosophical. What is, when you think back over your career, is there a belief that you held early on in your career that has changed for you? Maybe even completely reversed over time? Something that you thought, okay, this is a truth that, well, you know what? Maybe that's not as accurate as I thought it was once.
When I was younger, like I was very, some people think I'm competitive and intense now. I'm like, no, 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 you should have seen the 15-year-old me. But I very much believe that people's personality and who they were entirely driven by their environment. Right? It was like it's all environment. Anyway, so that's for whatever reason, that's what I thought. And then I grew up and had kids.
Hmm.
And my sisters and brothers had kids, and they all played together when they were young. And you're like, yeah, they just like have different personalities. And so, yes, I do think the environment plays a huge part. But what I learned is that some people, like some kids are just naturally much more active and rambunctious, and some kids are a little bit more, not so much. And yes, the environment can shape that. And I think, so you might say, well, so what's the implication? Is I think that I have become more accepting of different people because I'm like, okay, if that person, maybe they're an introvert or maybe they're an extrovert or maybe this is the way they behave. I think I'm much more patient in terms of understanding, okay, I see that's the way they are. And so I need to accept that and respect that. And yeah, again, we could talk about that, but work within them. And I think that that is very helpful when, in my business, I'm fortunate enough to get to work with so many different people, not just in terms of my founders, but in terms of my investors, in terms of the other investors around the table and everybody else. So I think that's one thing that comes to mind.
There's nothing like kids to teach you understanding.
That is for sure.
100%. I want to leave you with this. So, if you could offer a piece of advice to both founders and investors, doesn't even need to be the same piece of advice, but what would you tell investors and founders about how to build trust between each other and scale impact? What would you say?
I think I would just say be radically honest and candid and open, and remember that you are on the same team. And I think where problems arise is because people forget that you're on the same team. And I always tell our founders, when I first meet them after the money's in the bank, I'm like, okay, money's in the bank. Like you've cashed our check. You don't need to worry about what I think about you anymore. Like we are on the same side. Your job is not to impress me, right? Because like I've bought in, right? And so like we are just working together. And I think that ultimately that's what you want to create. And what that means is, as an investor, when an founder comes to you with a challenge, how you react is really important. It's a bit like having a kid. Like, how do you react if your kid comes and says, "Oh, dad, mom or dad, I really messed up." Like, what's your reaction? And so like I find, and I sort of laugh at myself, but I realize that whenever any of my founders phone up and say, "Oh, Janet, we got a bit of a problem," my first reaction instinctively is always, "Oh, great." And people, and I was like, one day I was like, why do I always say, "Oh, great"? And it's because I think great, because I know they're going to have problems. So like, if they never call me with problems, it just means that they're not sharing with me. And
Mhm.
it means that this person is calling me, they're going to share with me, we're going to have the opportunity to brainstorm together. So I think just that level of trust and respect and sort of knowing like that unconditional, like I invest in founders and I believe in them and I want them to be as successful as possible. I know they're going to make mistakes. I know I'm going to make mistakes, but we're in this together. And so like, let's just be candid and honest and recognize that we each have different things to bring and we're here for each other.
Be radically honest. Forget popcorn bags with Kijiji on it. How about popcorn bags that say "Be radically honest"? It's a $1 million seller, Janet. I got a great idea. How would you like to invest?
Okay, thanks, Ken.
Janet, thank you so much for this. It's an absolute joy to talk to you, and I think we've all got so much to learn from you. So definitely appreciate it. Thanks again for this.
Ken, thank you so much. It's been so much fun to chat with you this afternoon.
Idea to Investment is made possible by Tech Alliance of Southwestern Ontario. If you'd like to learn more about Tech Alliance and the resources available to entrepreneurs and startups, go to techalliance.ca. My name is Ken Eastwood. Thank you so much for joining me.